quick mic check. Okay, now it looks like we're live. So I'm going to do a quick mic check. Seeing some people come in, so still got a couple minutes until we get started. I'm really just going to hold off and wait until we get started. That way we are good to go. We got about 2 minutes, and then we will get going. Okay, man, it's pretty rough out there today. I have, I think we all on an ugly day today, have plenty of investments are down. So, we're really going to focus on some rules-based stuff today. Stuff to keep us in the market, not really get that shaken out, because I think it's easy to get shaken out of a market or to get shaken out of a stock or position, especially, as I'm looking at the screen, the market is down 4% in one day. But the last couple of times, it's kind of wild to think that we're at an all-time high and we're still in the middle of a deep, deep recession. So it's pretty wild. Real quick, I'm just going to kind of do a mic check. Can you hear me? Can you hear me? If you can, please type in the chat box that you can hear me. That way, when it's time to get started, we can get going. So I'll just wait for another minute or so, see some more people coming in. I'm just going to wait to make sure that my voice and everything sounds good. We are crystal clear. Awesome. Tony, Rodrigo, thanks, guys. Well, give about 1 more minute, and then we'll kind of get right into it. And we're going to talk about some things today. We're going to talk about a lot of rules-based stuff. Because it's really easy to get emotional, when you're watching the news, right? Whether it's the protests or whether it's, COVID, or, there's so many types of negative things on the screen. A lot of us, some people struggle really being able to shut that off, right? Because, there have been negative things on television for the last 3 months. And the reality is the market is at an all-time high. So, I think just that shows you, that the market's going to do what the market's going to do, not to focus on news and how you can make money off news. Okay, guys, it's 1 minute after. Everyone can hear me. I'm going to blow this up, and we're just going to chat. I'm really going to try to keep this to an hour. I am going to keep it to an hour. I should. Let me blow this up into present mode. Get my pointer out. That way everybody can see it. So I think we should be good. Okay. Today's topic, guys, I appreciate everybody who's with me today. We're going to have a lot of fun. We're going to talk about a lot of rules-based, trading objectively, right? I know it's fun to think that you can just, go with your gut and just kind of trade with the flow. But the reality is, the market a lot of times just has a different thought process. So I'm going to adjust my usual training session. The title of this training session is How to Time the Bottom of Stocks. And today I'm going to talk about a 3-step trading system that you can use. And I think the fact that we're starting to sell off today, is even more pertinent to whenever we get that reversal. And I'm going to show you how to use that, how to pull money out of the market. Today, I made some adjustments because I've given this presentation before, but I really updated this training session to update more recent trades, right? So we can really look at these and study them as case studies, and you can kind of have those in your knowledge bank. And in addition, I want to talk about exit strategies, right? Because I'm going to teach you the trading system, and this trading system is so easy, guys and gals. You can write it on a Post-it note if you don't know it already. But I'm going to really add something to this. I'm going to talk about how I came about this exit algorithm that has been so profitable that goes with this trading system, and why I'm hoping to empower you to kind of look at some of your own trades and say, okay, if we were to look at the same entry, what would have been different? So I'm going to cover a lot today, guys. My promise to you is by the end of this training, you're going to have a serious trading advantage over a majority of traders. And, I know that for a fact because, the 3 rules I'm going to show you combined with a little, 20-minute a week homework, right, can make you a successful trader. If you follow the rules, guys, I'm not biased about this. I'm not biased about my own trading system. There are other trading systems out there, but it's the law of large numbers, right? It's just the math. And if you follow, a statistical system, you'll do just fine over time. So luckily for me, I get to see traders put these trade plans in place every single day. So real quick, guys, and I just want to show you like how real this is, right? This is Brad from Illinois. He talk about being a headline chaser, right? Trading off the news, trading off what you see on the TV. Now he's a strictly rules-based approach. So he said, I owe Stephen many thanks for his patience with me while I was still trying to figure everything out. I missed out on a few of his winners when I first started, but now I watch for the alerts and I place them immediately. This year, I've started applying the options to my swing trades, and this has been going gangbusters since we started, so keep it up. So I'm going to talk about this. I'm going to talk about, really transitioning to make sure that you are following a rules-based system, and the lights will start to come on. So real quick, got to make the lawyers happy. We do have lawyers in this world, so I'm going to let you read that for 1 second before I move on. Okay, I'm going to assume the lawyer's happy. So I do value your time, guys, and even though I know this training session is incredibly valuable, I'm going to give it to you free today. I'm going to give you the rules. I'm going to give you everything that I've learned and been trading for the last few years in this one system. But the weekly income system, what I'm going to talk about today, that's really just one of my top 5 strategies. Stay with me to the end. Right, really get engaged, really write notes down, and I'm going to give you the 5 cornerstones course free because what I'm about to teach you is just one of my top 5 strategies in this course. I'm going to teach you all 5. I'm going to show you how to access this at the end because I value your time and I appreciate you spending it with me, and I'm going to make it worth your while. I'm going to teach you some really, really good stuff. I want to make sure that you're in the right place, guys. So this training is for you if you need a actionable trade plan to pull weekly retirement income from the market, right, from your trading. So if you're looking for that extra retirement income, you're looking to pull it out of the market, I'm going to show you how to do that. Maybe you've been consistently losing money, even in bull markets. I get this all the time. The market's going up and people buy extended stocks, so they just don't stick to a trade plan. We're going to focus on a trade plan today. Maybe you want to retire early, like maybe you're behind, you're 50, you're really looking to play a little catch up. You want some growth in your portfolio without huge drawdowns like we did earlier this year. Or maybe you just can't afford to lose any more money from trading, right? And it took me a while to reach the point where I'm like, you know what, I've had it. I'm going to start, developing my trading system where I'm going to follow a rules-based approach. And maybe you're at that level right now. So if any of these sounds like you guys, you're in the right place. A little bit about me. I think most of you know who I am already, but my name is Stephen Kowitzel. I'm a former financial advisor turned trader publisher back in 2013. I worked with a practice with 60 million assets under management, author of the Expert Trading Systems, and the head publisher and founder of thetradersplan.com. So this is me, just so you know who you're speaking with. And let's talk about what makes this easy. What I'm about to teach you, what makes it easy. 1, there's 0 fundamental analysis involved, just price and volume, right? You don't have to worry about sales, earnings, any of that stuff. Just really price and volume, technical analysis. There are only 3 rules that you can literally write on a Post-it note. Literally write it down, stick it on your computer screen, and it only takes 20 minutes per week. I am not exaggerating when I say, or under exaggerating, should I say, it only takes 20 minutes per week, right? I'm going to show you how to do this so you can do this. You can make it easy for you, and then you can focus on the things that you love most so you're not staring at your screen all day. Now, this is not for you, right? If you cannot follow rules I guess that's a typo, and choose to follow your gut, right? If you are always, wanting to follow your gut, you're not wanting to follow a system or a rules-based approach, this is going to be hard for you to stick with. Maybe you love the long shot gamble approach more to making money, right? What that means is like you still get excited every time you hit the buy button, right? This is, this is excitement for you. Like, I am looking for the individuals that I can work with or at least teach that are ready to treat this like a business. In addition, you have to be able to come to terms with the fact that the market knows more than you. Now, all I mean by that is I mean that the market is always right, right? You use hard stops, you never argue, you never try to revenge trade, right? The market is right. If you get stopped out, you get stopped out for whatever reason, you move on to the next trade. So now I'm going to talk on a big picture level first, and then we're really going to dive deep down into some rules. So when studying the bottom in stocks, I noticed that there are certain qualities all stocks have before they turn into winning trades. Now, in order to identify this money-making setup, we must recognize these qualities before they make their big move. Now, lucky for you, I have narrowed down these qualities to a rules-based system. I've been perfecting this system and trading it and working with individuals for 3 years on this specific system. Now, how to set it up, right? I'm going to tell you how to set it up before I teach it to you because I want to show you how easy it is, right? I want you to come in the mindset. This is incredibly easy. Every Saturday or Sunday morning, right? I usually do it on Saturdays. Spend 15 minutes going through your scans. And I'm going to talk about that for the best setups, right? Just 15, 20 minutes tops. Every Monday morning before 9:29 a.m. Eastern, right? The market opens at 9:30. You're just going to place a market order for your setup, right? Whatever stock you're going to buy, whether it be Apple, whatever the case is. And then just set your alarm on your cell phone every Monday and rinse and repeat, rinse and repeat. So you just spend 15 to 20 minutes on the weekends going through a couple of scans, finding high quality setups. Then you're going to place the market order on Monday. I'll show you how to set the orders and everything, and then voila, right? It's going to be that easy. So how to set it up? I'm just talking about a market order, guys. I'm not talking about anything that's too complicated or that you can't do, right? This isn't, this isn't really hard options trading or anything like that, complicated condors, nothing. This is just, we are placing market orders, buying good old fashioned quality stock setups, right? Placing a market order, boom, there you have it, okay? All right, so this is the weekly income system. Now, I'm going to show you the system. I'm going to show you the rules. We're going to look at some samples, and then I'm going to take you to a spreadsheet where I'm going to show you kind of my testing, right? Not only live, they're going to be on live trades, but how I, said, well, what if I would have, sold here, 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 and stacked them all against each other, okay? So this is the weekly income system, and if you've been following for a minute, maybe you know about it, maybe you don't. But this is where a lot of profits come from. This is my #1 strategy, and it's incredibly easy. So right here, you have Eversource Energy. This is a weekly chart, and I'm going to look at other samples. I'm talking about this signal bar right here. This reversal signal bar right here is what we're going to go after. Now, you can see on this screen, this signal bar is at the low, and then it absolutely takes off. Is every stock going to double after you find this signal bar? Absolutely not. But I think it's important to show you how powerful it is, because if you look at charts and you start to, you're going to be able to identify this weekly bar, 2 to 3 times on a chart. It's going to pop up over and over and over again. Okay? So real quick, let me take a sip of a drink, and then I will get started. All right, good, thanks. All right, Winnebago. We're going to look at some more recent examples, but I like this just to show you how many of these setups you can find on a given chart, right? Doubled here, failed here. This is actually another one right here. You got 225% winners over here. You got 131% winner down here. I'm going to focus on this signal bar right in the middle of the screen. It's easy to see, right? It's right in the middle of the screen. That's the one I'm going to choose to use as my case study. And then we're going to continue to look at more charts because I want to train your eye. Now, when I said you could literally write this stuff on a Post-it note, guys, these are the rules. I absolutely meant it. So if you're staring at your cell phone, you got TV on in the background, you got distractions, it's really time to shut all this off because I'm going to walk through the rules. I'm going to walk you through samples. My goal is so you can do this yourself, so you can have a trade plan on your own and you can do this yourself. But if you're distracted, you're going to miss something, and then it's not even going to make sense to you. Okay. this nice signal bar, this nice reversal bar right here. Everybody focus on this. So I'm going to talk about the rules. Rule number one, this is a weekly chart, by the way, not a daily chart. It's very, very important. Weekly chart. Okay, rule number one, this signal bar must undercut the previous 3 weeks. 1, 2, 3, right? The low, this 23.47 low right here, it undercuts all these weeks, right? Check. Rule number two, the signal bar must close above the previous week's close, right? And it's just easy to identify that. Is the bar green? If the bar is green, you know it's above the previous week. That's all you need to do, right? Check. Rule number three, must be above average volume, right? You can look straight down. You can look over here and kind of see this volume bar. We want that institutional volume, right? We want the above average volume. And all I do is I plot a 50-day moving average over these volume bars. And if the volume is above that 50-day moving average, I identify that as above average, okay? It's just that simple. Now, let me walk you through the rules again. Let me explain the psychology behind the rules, and then we'll look at some more examples, right? So you can easily identify this, train this with your eye. Okay, so rule number one, must undercut previous 3 weeks, right? The low of this week has to undercut the low of the previous 3 weeks. Now, why do I do that? Well, there's nothing like a good shakeout. How many times has the market picked off your stop and then turned around, frustrated you? You wanted to get rid of the stock, or you wanted to, not think about it after it stopped you out, and then it turned around and it, went on to reverse higher. Okay, so a lot of times these institutions, right, the smart money, they're going to try to pick off your stop, right? Just run the stops, right? Flush out all the weak holders, the retail investors like you and me, and then reverse, right? So that's why I like to really, flush out, undercut the previous week so you have a nice reversal, right? It's a very, very valid signal. It undercuts the previous 3 weeks is better than undercutting the previous week, right? We've got to narrow these rules down somehow. Rule number two, must close above the previous week. I just want the bar to be green. Now, when this weekly bar is going to reverse, let me see if I can blow this up just a little bit for you, okay? So if this weekly bar is going to reverse, like, I want there to be enough support so the stock can at least close higher than last week, okay? Because again, I'm trying to narrow these down. I get, good signals. There's several good signals per week, a lot, and I got to narrow it down. So if it doesn't close above the previous week, if it's not a green bar, there's not a ton of institutional support there. It's best to find something else. So that's the logic behind that. Now, rule number three, must have above average volume. You see these bars? See these bars right here? That's the smart money, right? The pensions, the mutual funds, the institutions, the hedge funds. These guys are moving way much more money than you and me. It's not even close. Now, we are retail investors. They are institutional investors. A lot of times when a stock is falling, institutions will take and initiate a position, right? Like their initiation might be a $50 million position, right? Sounds huge to you and me, but it's a drop in the bucket to them. Well, the reality is these mutual funds, they have to stay fully invested, and it usually takes them anywhere from 3 to 4 to 5 months to complete a position, right? So they might take this reversal could just be a starter position. And it's likely, if it's an above average volume, it's more than one institution stepping in to support their stock. And then as retail investors, as individual investors, you and I have the flexibility to jump on the bandwagon and just ride their coattail up, because it's going to take them 2, 3, 4, 5 months to complete their position, right? We can move in and out very, very quickly with a, $5,000 to $10,000 trade, where these guys are moving a ton of money. So the psychology behind just riding the coattails of the institutions, right? I want there to be huge volume because I want to know there is institutional backing behind this setup. Now, I say, okay, the reality is when an institution, when a mutual fund, a pension, when they take a huge position in stock, they're not going to turn around and sell it the next week, right? Again, remember, they're accumulating over the next 3 to 5 months. So they're not going to turn around and sell it. So they're more likely to accumulate more. like I said, as retail investors, we can just jump on the bandwagon, ride their coattail until the trend is over, which it was right here. Okay, so let's look at another example, and I might wait for questions to the very end, guys, because I have full screen on my presentation slide, so I'm not looking at the chat box, but I will without a doubt answer questions at the end. Okay. So let's look at some more examples, and let's look at some examples from this year, without a doubt. Okay, so this right here is frequency therapeutics. This was a real life trade that we took. Now I'm going to talk about some money management rules, right? Because most people are like, "Hey, Steve, I got the rules to enter. That's cool, and I'll just take this and run with it and decide to sell it whenever I want to." But the reality is, if you go do that, you're not going to come close to producing the kind of results that this system has, that is a proven system, and that we are. So I want to really, really dive deep on this rules-based approach on the money management side of things. Okay. So let's look at some recent examples. Frequency therapeutic. I think this is a perfect example. Okay. You have a weekly reversal right here. It's clear as day, right? You can see the bottom, this 1650, undercut the previous 3 weeks. 1, 2, 3, check. Close above the previous week, rule number 2, the bar is green, check. And above average volume. Now, there's not a 50-day moving average because this was an IPO. There wasn't 50 periods, but you can clearly see that bar down there is above average relative to the rest of the bars, okay? And then we buy at the open on Monday, okay? So again, you do your homework on the weekends. You go through above average volume scans. You can just go through very basic scans that your broker already has predetermined. I love earnings gap up scans. In earnings season, you're gonna find a ton of these because the stock will be downtrending, and then all of a sudden it will have an earnings report, and then boom, it will reverse and go the other way. That's kind of a nice little honey hole to find these. So there, I just told you where to find them. Okay. So you enter at the open on Monday because we have to make sure that this is an end of week close, right? I have to make sure that the bar closes green. I have to make sure the volume is above average. So I'm not front running the signals on Friday. I'm not doing anything like that, right? I'm waiting till Saturday, and then I'm going to find 2 or 3, and then we're gonna talk about how to narrow those down. So you buy at the open on Monday. Now, here are the rules, okay? So I'm going to walk you through the rules, and I'm going to take you over to a test of mine to show you like how valid these rules really are, okay? So the rules are: you enter at Monday, at the open on Monday, whatever the price is, okay? You just buy right before the market opens on Monday. Max stop loss of 10%, okay? So you're never risking more than 10% on a trade. So if you can put a stop on 1% under this 1650, as long as you're not risking more than 10%. If it's a really long candle, a 20% candle, you're not going to put the stop way down here because we're not going to risk 20% on trade. We're going to risk 10%. So that means I need to raise the stop up here, okay? So we have to keep our risk reward there, but we're going to enter at the open on Monday, and we're going to use a 10% stop loss. Now, here's the trend following rules that have really, really proven well. I'm not saying they're perfect. I'm not saying they're the holy grail. I'm saying they work, okay? They work if you stick to the rules. So we sell half at 8%, okay? So we buy at the open on Monday. Honestly, this bar right here was up like 35% week 1. So I think everybody was happy and tickled to death, obviously, right away. So our target 1 is 8%. You need to be writing this down. When we hit that target 1, that 8%, we sell half, right? Immediately book partial profits. And then we raise stop to break even on the remaining shares. Now, why do I do that? Well, that way, because I can sell half at 8%, I raise my stop to break even on the remaining shares. That way, if it hits my target 1, then rolls back over, I'm still netting a 4% gain on the trade, right? Because I'm selling half at 8%, I'm selling half at 0. It's a net 4% gain. Now, it's still a good weekly income trade, right? If you can book a 4% gain. We actually did that this week. We immediately hit 8% within like 15 minutes at the open on Monday, and sold half, raised stop to break even. On Tuesday, it turned around and stopped us out on our break even. So we made 4% in less than 24 hours. Now, obviously, I would have liked for it to continue to go up, but it didn't. I'd rather get immediately stopped out for a gain than immediately stopped out for a loss. Now, a lot of trades, they're going to continue to move higher, right? So what I do to trail the stop is once the 50-day or the 10-week moving average, which is roughly the same thing, move above the entry, above that new break-even point, then I start to trail 1% behind that line. Because, I like to trend follow growth stocks. I'm going to book partial profits now because I don't know, how far it's going to go. And then I'm going to trail to give the remaining shares a little bit more room to breathe, because I've been trading growth stocks and trend following growth stocks for a long time. And that 50-day moving average and that 10-week line, that is a sweet spot. A lot of times, if they're going to trend for several months and it's going to be big, they're going to trend above that line. So, and sometimes they'll go up, you'll be up a lot, and then it'll come back and crash down, right? And I'm showing you these examples because I don't want to show you the perfect examples. I want to show you, all kinds of things so you can see what's possible. So we got stopped out right here on the second half, right? Sold remaining shares, right? When it broke the moving average, 1%, for a net gain of 11.22%. So I think I sold half at 8%. I sold half at around a little bit above 14%. And so 13, 14% in that range. So I average 11.2% or $560 profits, right? So you enter, and I'm going to use $5,000 as an example because that's kind of a sweet spot where a lot of people trade. I have some that literally put in $50,000 a position, but it's a nice little sweet spot. So made $650 profits on this one. Now, let's go look at a few more examples, okay? No. Okay. KBH Home. I really like this case study because it is, it's a pullback within an uptrend. Okay. So let's talk about this. So you have, keep doing that. KBH Home. There's a clear reversal right here. Huge volume, right? That's very, very clear. We entered with a $5,000 position at the open on Monday. Sell half at 8%. Right? Once it gets to that level, raise your stop to break even on the remaining shares. You sell the other half, right? When it breaks the moving average. You can see that once it got going, like it started to trend above this 10-week moving average. Now, you could argue, well, you should have sold more up here and all this stuff. And one of the biggest mistakes, I always look at my biggest mistakes every single year. My biggest mistake almost every single year that I make trading is a lot of times I will sell a big winner too early. So I am a trend follower. You have to give your position room to breathe or else you're never going to have big winners, right? You got to give it room to pull back. So we sold this, netted 15.2% on the trade, or $750 profits, right? Again, more rules, right? We're talking rules. Once we find our setup, everything is rule-based. There is no room for discretion here, right? And that makes it, if you can stick to something like that, that really makes it incredibly easy, because you have your stop losses in places, whatever happens, and you don't have to stare at your screen. Now, this is what I would consider an incredibly high quality setup, and here's why I say that. I consider this a high quality setup because it reversed above the 40-week moving average. So I want you to write this down, okay? So this is how you narrow it down. Let's say you find 2 or 3 patterns over the weekend and you only have room for one. You don't want to buy all 3. So you're like, Steven, which ones are the highest quality pattern? Buy the one that is technically the strongest, meaning if you got one that reversed and it closed above the 40-week moving average, that is institutions stepping in and supporting their stock, not wanting to fall behind a line, below a support zone. That is strength. I would like to buy that strength right here, okay? Versus, when you have reversals, down here, wherever other the reversal are, you have a higher fail rate. You have a bigger snapback potential. Like look over here. Like, you have the coronavirus right here. it snapped back a lot. You have bigger snapback potential. But I think this is an exceptional case right here. You would have made more money buying this one down here than this one. But you're going to have a much, much higher win ratio if you focus on the stronger ones. And if you have a higher win ratio, it has psychological benefits. You're going to stick to the system. You're going to stick to the rules versus if you're buying a bunch of junk down here, even though it worked, you might, you're going to have probably your win ratio is going to be much under 50%. Okay, because it's in a downtrend. Most downtrend reversals fail. It's just a reality, right? But the trend, it might reverse and pop for a little bit and then it'll roll back over. Okay, we're focusing on strength. Okay, $750 profits. Nice little weekly income to pull out. Okay, now Sonos. This one right here. I like to show this one because it didn't quite look like the other ones. This is down a little bit down here. So, but if you look at the volume down below, look at, you can see those blue arrows down there. Look at the 3 weeks, 4 weeks, 5 weeks before. Look how, when it was falling, how low the volume was. Then all of a sudden, boom, you have a support bar right here. Okay. So when I see the low volume down there, that is much, much lower than all of a sudden you have an accumulation bar, right? That's going to give me much more quality in a trade. Now, this right here is in a first stage rectangle bottoming pattern, right? It's not like trying to buy one of these reversals right here that failed. Right? You can see this right here, clear as day. This reversal right here is in a straight downtrend. It failed. Okay, this pattern would have failed. However, this one now is starting to bottom and he's trying to go the other way. This even has a higher fail rate than KBH Homes, but it worked. Okay, so you buy at the open on Monday with a 10% stop loss. We sold half at 8%. These are real examples. This is not just back testing or back looking. These are real live trades. Sold half, rose our stop to break even, and then sold the remaining shares for a net of 11.2%, $560 profits, right? And that's assuming a $5,000 position, right? Did we get out at the very top? Absolutely not. Did we, was there more to be made? Sure. But then look what happened, right? It's not about getting in at the very bottom. It's not about getting out at the very top. It's about making money consistently, okay? And even though we didn't get in the very bottom right here, we got in close to the breakout zone, right? This is when this pattern happens, you have a high success rate if it's a high quality pattern, okay? Made some nice profits from it. Now let's look at Amazon for a minute. And full disclosure, still on this one, okay? But I think this was a great example of, and I'll be honest with you, I never really owned Amazon before, and it has been basing for almost a couple years, and I was waiting for some kind of signal. The coronavirus happened, and then you get a nice weekly reversal pattern. It almost closed above the 40-week, almost. So it was right there, huge volume bar. You can see right here. Look at this volume bar right here, right? Look at this weekly reversal. That volume bar is bigger than any other bar on the chart, okay? When I see, this is billions piling into this stock. Billions that isn't going to turn around and sell it. Again, I'm a retail investor. I'm going to hop on the coattails, right? And this reversed with the overall market. Bought at the open on Monday, sold some at 8%, and then it's still riding above the 10-week moving average, right? Or if you're looking at a daily chart, the 50 days. So right now I'm trailing 1% behind this line. Who knows where this is going to be at? Who knows if today is the start of something bigger? Like, I don't know. I don't care. I have rules in place. I have rules in place because how many times have you said to yourself on this rally, right? On this coronavirus rally, the market's at an all-time high. We're in the middle of a deep recession. How many times have you said to yourself, man, the market's about to roll over? It just can't go any higher. I say that to myself all the time. I do. But then I keep my rules in place. I keep my rules in place. I stick to them, and I've made a ton more money. If I was going off my feelings, I would have sold out of everything over a month ago. But the market does what the market's going to do, and it knows more than me. It's smarter than me. So I stayed in, and because I follow a rules-based approach, and we've made a lot of money because of it. Okay. This one isn't even close to my biggest winner. My biggest winner is CrowdStrike, up over 60% since we bought this reversal around the same time in CrowdStrike, right? It's up a ton. Okay, so that is, I think that's the last example. Now I want to walk over to a spreadsheet of mine. Let me stop sharing for a second. Let me stop sharing for a second. I'm going to share a spreadsheet of mine, and then we're going to walk through some stuff. I want to show you the power. Let me give me just a second. Let me reset this. Okay. All right. Turn screen share on. Chrome tab, spreadsheet. Voila. Okay. Think everybody can see my spreadsheet now. Okay. So I want to show you something. Okay. How this all came about. All right. So I honestly was inspired by a course I was going through at the Van Tharp Institute. You know, they were the ones that really said, okay, you know, your exit strategy is very, very important, you know, more important than your entry strategy. So I was like, all right, let me test that theory. I'm going to take, and these are real live trades, by the way. I have, you know, 20 right here, and then I have some down here. So we're going to look at these batch of trades. I'm going to walk you through what I did, and I'm hoping I'm about to inspire you to do the same thing with your trades. So I'm like, okay, I'm going to take this batch of trades that I traded. I'm going to take what I actually made on the stock. I'm going to call it E1. Okay, E1. That's my discretionary exit strategy. That is when Steven thinks the stock is done. Okay, and I'm going to stack what I actually did versus 4 different exit strategies. Same rules, same entry rules, same stock, same date, same everything. Just added some different elements, tested up against, like, what if I would have sold it here instead of here, here instead of here. So here are, let me walk you through what Steven actually did a couple years ago versus 4 exit algorithms. And I'm showing you this to show you that, like, look, you know, maybe you can correct your mistakes too. I've corrected mine. I'm a professional. I still make mistakes all the time. But if you can't admit your mistakes, I mean, that's issue number 1, right? You know, admit that there is always room for growth. Okay. So E number 1 is Steven. E number 2, that is the exit algorithm that I decided to go with going forward, and that I just taught you. I sell half at 8%. I raise my stop to break even on the remaining shares, and then once the 50 moves above my break even, I trail at 1%. That is what I just taught you. Okay. Versus E3, which is sell half at 8%. And use the original stop, leave the original stop for the remaining shares, or the 50-day moving average, whichever is first. So the difference between E2 and E3 is not much different, but E2, what I've already taught you, is after I sell half, I'll raise my stop to break even. E3 is I'll leave my stop in the original place, and I'll wait for the 50-day moving average to rise. Okay? Now, E4 is true trend following. So I'm like, okay, I'm selling half here, I'm selling half here. These two are very similar. E4, I'm not going to sell half of anything. I'm just going to enter with a 10% stop loss, or wherever I decide my stop loss is going to be, and I'm going to sell all of it when it breaks the 50-day moving average. Okay, not selling half of anything. All right, so I use original stop or the 50-day moving average, whichever hits first. E5 is I sell everything at 8%. So you can see right here, I went on quite the win streak if I would have done that, but I'm going to show you why doing that sounds good. It might make you feel all warm and fuzzy, but you're leaving money on the table. So I want to recap. This is Steven. This is the one I've taught you, you know, sell half at 8%, stop to break even. This is sell half at 8%, leave original stop. This is sell all once it breaks the 50-day moving average. And this is sell all at 8%. So I literally have 4 different exit strategies I stacked up against myself. I have 32 trades I tested this with. Okay, this was a couple years ago. Out of 32 trades, Steven averaged 4.21% per trade, right, with a 62% win ratio. So that is a net gain per trade. So that means that all the wins minus all the losses divided by 32, that gives me my net gain per trade. Okay, so I'm going to say net gain per trade. Okay. Now, E2, if I would have followed a pure exit strategy, the one I just taught you, E2, I would have averaged 8.89% per trade. That's win or lose. Every time you're hitting the buy button. I'm going to be honest with you, this was a good batch of trades. And I've tested this against other batches of trades, and it's not that much different. This is probably a better batch, but that's not the point, okay? The point is how much different my feelings, what Steven did, versus a purely mechanical system, right? I doubled my performance when I went purely mechanical, okay? E3, a little bit better, but about the same because they're very similar. Now, so look at this win ratio. On E2, the one I'm now trading to this day, I doubled my performance and I increased my win ratio, okay? I think these are 2018 trades, by the way. And then once I switched over to E2, I stopped back testing because I didn't need to because I had my strategy. Now, E3 is slightly different, has a slightly better net gain per trade, but a slightly lower win ratio. Now, E4, look at this, right? The win ratio is significantly lower than E2. Okay, the win ratio is only 53% because you're not selling half at 8%. You're selling it all when it breaks the 50-day moving average. But you are going to have some big winners, right? Because some just run, okay? So you're going to have a lower win ratio, but your overall, when you hit a couple big ones, your overall profits are going to be much larger. And then E5. E5 is selling everything at 8%, no matter what, selling it all, okay? So look at the difference. And the point I'm trying to make here is not necessarily the net gain per trade. But the point I'm trying to make is, like, I took the same stocks, my actual same entry, same date, same everything, and I've slightly changed the exit. And I went from, anywhere from 5% per trade to 13% per trade. All rules-based. No room for discretion whatsoever. And look at the difference between win ratios, okay? This is the best case study I've ever done. This right here, this spreadsheet, what you're looking at right now is probably the single thing that has just really improved. I mean, I was already doing pretty good, but has really improved my performance over the last 2 to 3 years, right? This right here, because I realized how much money I was leaving on the table because I decided the stock couldn't go up any higher, okay? I'll give you a perfect example. It's almost hard to talk about, the Bitcoin ETF. It went up 30, I bought it, it went up 31.5% in 5, 6 trading days, something like that. I talk about this all the time. And I sold it at 5 to 6% because I did not think it could go any higher. Okay? Didn't think it could go any higher. It went on, if I would have, followed E4, just rode it until it broke the 50-day moving average. I mean, it went on to tripled from the peak, but it was up more than 135%. I would have doubled my performance. Here's another perfect example. ZYNE, I was up 64%. What is wrong with that? Well, if I would have followed this, I would have been up 169%. Okay? So because you're selling half at 8%, when you get those big winners, you're not you're not gaining as much for the ones that continue to run. The downside to E4 is you're going to have some losing streaks, right? Like you can see this batch right here. That's about 11 trades. You would have lost on, we'll just call it 12 trades. You'd have lost on about 8 of them, right? So sometimes when it's not going well, it's going to be hard to stick to. So you have to kind of know thyself. And maybe you don't follow a moving average system. Maybe you like RSI or whatever the case is. But knowing myself, I don't like losing 7 out of 10 or 8 out of 12. Like that's just not something that I'm going to stick with, and I know it. So I'm not going to put myself in that position because it doesn't match my personality. So I came up with the E2 that I decided I'm going to stick with because I also feel that my students, my subscribers, my traders, whatever you want to say, it's very easy for them to follow as well, right? And on every single trade alert I send out, these are the rules I use, right? So there is no question when we're getting out, right? How long we're going to let it run. Not going to sell when I think it should, go down, because you can see right here. Look, I had a batch of losing trades, and this would have been a batch of winning trades. Okay, 4% per trade isn't nothing to write home about, but I'll take 4% per week. Okay, so I hope just showing you this inspires you for a couple things. One, do it on your own trades, do it on your own live trades, and set it up with a mechanical system, right? And if you want to, email me and I'll send you these rules so you can backtest your own trade yourself. But two, this is why having a rules-based system, right? Not your feelings, not your gut, a rules-based system is so powerful, because I literally believe, you're losing significant amount on the table. Now, again, this was a good batch of trades, okay? But so I'm not trying to just pick the perfect trades, but that's not the point. Right. So I hope that was valuable. Let me go back over to the training session. Give me just 1 second. I'm going to turn my screen share off. I'm going to go back over to that. So real quick, guys, I just want to ask you kind of before I move on, was that valuable, what I showed you, that spreadsheet? Like, I put my heart and soul into that spreadsheet, but it took me a couple days to finish. Yes, hey, Neil, to be clear, yes, this is 4% per trade, not 4% a week, but a lot of times I do make one trade per week, okay? So just kind of be clear on that. But yes, yeah, I normally alert one per week, right? So I mean, I hope that really helped y'all. I hope that was valuable, because there's a lot of good information in there, right? Because I do believe on following a rules-based approach. Now let's keep moving forward, right? I talked about Amazon. I talked about where I was at, right? All I did was follow the rules-based approach. It got me in and it kept me in. I don't know where it's going to go from here. It's not my decision, right? So I just have a hard stop. I raise my hard stop about once a week, right? As long as the line's moving up, I'll trail behind it, right? And I like to go fishing, with the rest of my time. Okay. So how to sell, right? I talked about, the mechanical strategy I just taught you, right? I talked about the rules base. I talked about the money management. I'm giving you everything here. How to sell. This is, what's called a bracket. Now, every broker is different. This is a Charles Schwab. I just took a snapshot out of here. This is Charles Schwab. And this is really if you want to make it mechanical as possible. This is Red Robin Gourmet Burger. This was a real trade, but the point is, when you put a bracket on, you might have to call your broker to learn how to do this with your own system. But I can literally turn around at 9:30. I'm filled with Red Robin. At 9:31, I'm going to turn around. I'm going to put a bracket. I'm going to put my stop loss price. Just calculate 10% below the entry, and then I'm going to put my exit price. Now, this is just an example. Review order, place order, boom. So whatever happened, now you're going to automatically sell some on the upside. You're going to automatically sell on the downside. You don't have to watch your stock. Go fishing, do what you want to do for the rest of your week. This system is really designed 20 minutes a week. It's not meant for you to be glued to your screen. Whatever the stock does in between your profit target and your stop loss doesn't matter. You don't have to pay attention. You can wait until you hear that ding, that notification on your phone, right? This is another way to make it mechanical, just a bracket, so easy. So can you do this? Can you spend 15 minutes a week to find these setups? I told you where to find them, okay? Can you place a market order before Monday at 9:30 a.m., right? I think you could do that, very simple. Can you set up a bracket order? That might take a few minutes, 5 minutes, call your broker, say, hey, how do I do this? Because I can only do it on my system. I don't know how every brokerage is, but guys, this is designed to be completely mechanical, completely easy. Find your setups in the earning gap up scans and above average volume scans. Look on the weekly chart, not on the daily chart, on the weekly chart. That's a big mistake. man, I'm telling you, this system has consistently outproduced, especially since I went to the E2 model, consistently outproduced the market over the last couple of years, and even in these coronavirus months. So, so I'm going to show you the 2019 numbers. I'm also going to show you the 2020 numbers. And again, this is what we actually did. This is the E2. This is that exit strategy that we're doing now. So in 2019, I sent out 38 Monday morning alerts, right? The weekly reversal alerts, right? I send them out before the market opens every Monday. Tell you we're getting in at the open. Here's a stop loss. Here's the 8% target. Okay. In 2019, we had 27 winners with a 71% win ratio. Okay. On average, I'm sending about 1 trade a week or 3 per month. I'm going to find some weeks that I just don't want to buy anything. There's nothing that looks good. Maybe the market's starting to sell off, so I might just skip a week here and there. I focus on quality, not quantity. Well, on average, you're going to get about 1 a week or 3 per month. The average trade is going to last about 2 to 4 weeks, and you could have about 4 to 5 trades on at a time. Right now, we have, I believe, 6 on right now. 6 on. So, so you can have a portfolio of these. In 2019, our net gain per trade was 5.88%. That's almost 6% per trade every time you hit the buy button, right? Win or lose, right? That is what we've averaged based on everything I've showed you, okay? Now, the next question I'm sure is going to be, well, what was 2020, right? So 2020, we have still really kicked the snot out of the market. So I've done 19 trades year to date. 13 have been winners with a 68.4% win ratio. Okay, so 13 out of 19. I completely skipped March due to the coronavirus sell-off. Like, I didn't send out a signal. It was dropping like a lead balloon. Something was off, so I just didn't send any alerts out that month. And I'm glad I didn't, right? Because they would have all been losers. The market dropped 33% in a very, very short period of time. So out of these, several trades are still live. So even though we've dipped a little bit, that's still a 3.6% net gain every trade, right? And if you average 2020 and 2019 numbers, you're looking at about 4.4% per trade. So we've still done very, very well, and we're sitting on some very, very big winners right now. So now, how to pull weekly income from this, right? Because we talked about, 1 alert per week, and you're going to kind of ladder them in. So you're going to have a portfolio of these, okay? All right, very, very good setups. Now, I'm just going to show you what's possible based on how much you put in per trade, right? So, if you put in $5,000 per trade, this is what you can pull out on a weekly basis, not on a trade basis, on a weekly basis. Or, what you can pull out on a monthly basis. So again, I got some traders that put in $25,000 per trade. They're making quite a bit extra income, and then I got some that are here or less. But either way, this is real income that we're making, and that you could be making too if you follow the system, you follow everything I taught you. Okay, so where you want to be on this grid is completely up to you. But at the end of the day, I can only give you the rules. I can only give you the system. If you don't stick to it, you're not going to get these kind of numbers, not even close. And this is no guarantee that you're going to make this in the future. Let me throw that. But we have been incredibly consistent, incredible. So do you agree the weekly income system is easy to use, right? I've taught you everything. I've taught you the rules, the money management, why the background behind the money management, why this is important, okay? Why it's easy and how you can do this. I hope you took good notes. Might take 1 week to get the hang of it, but guys, this is easy to use. Write it on a Post-it note. And it's really designed to take the emotions out of trading. I mean, I'm pounding, my hand on the table over here, talking about rules-based. Take the emotions out of trading. Turn off the TV because the rules-based systems, I mean, they're designed to really give you the more freedom, right? You don't have to be glued to the screen. You don't have to figure out when to sell, right? And honestly, the smart money uses them because they work. These institutions, I mean, they have rules-based trend-following systems, and it works. In addition, the rules-based approach really keeps the drawdowns limited, because if the market's dropping, the market's under certain key levels, and I'll teach that in the 5 cornerstones course, then you know what type of markets to stay away from. Okay, so it is also designed allow trading to be a money-making business, not a hobby, right? We talk about that. Whenever you're ready to turn this into a business, and kind of get rid of the emotions every time you hit the buy button, man, you're going to reach some good places, right? Some good income, some good places with your trading. Now, these are testimonials, and I'm just going to read these real quick. These are very, very recent testimonials I got about a week ago. Scott, he said, I sold half at 8%, right, and have been rolling the remaining ever since, right? Currently up 198% on the closed position, 220%, including current open position. Now, to be clear, these are options right here. But I mean, he's tickled to death, right? He bought the stock and he bought the option. This is Jim, and I like this one better, even better than this one, because you can see him transitioning to a rules-based approach. He said, I've slowly come around to completely following your guidance and am doing well as a result. I realize we are on a hot streak right now, but your basic principles are rock solid. I'm making some outside buys. I call it Play-Doh, using your concepts. So far, so good. Now, why I like this one is because you can just hear it in his voice, right? Following the guidance, following the rules, and he is doing better because he's following the rules, okay? So I've taught you everything you need to know. All of it, you have it. If you want me to do some of the heavy lifting for you, you want me to, send out the alerts for you and do the heavy lifting, here's what that would look like. Right now, I'm looking for 20 individuals to join the weekly income system. Now, I have some additional training sessions to go along with this, to go along with what I've taught you today. Now, from 2019 to present, on average, you've been looking at about 4.84%. I think I said 4.4 earlier. It's actually 4.8% per trade, or $242 per week in weekly income. Okay, very easy to execute. 20 minutes per week, 3 rules. Very, very simple. I continue to dive deeper into this. In addition, I'm going to send you the alerts. So every weekend, I grab my coffee, I grab my charts, go through them. I'll find the top 2 or 3, and if I find 2 or 3 good ones, I'm going to send you all 3, but I'm going to send you the one that I actually like the most. I'm going to say, okay, we're buying Amazon today at the open. Here's our 8% target. Here's our 8% stop loss. And I send the email and the text alerts to go along with that. Now, that is a short-term, what I taught you is a short-term weekly income system. So now I want to talk about something that can really complement the short-term system, because I work with a lot of retirees, and this is a long-term ETF trading system. So I'm going to throw in an extra trading system for free as a bonus. Now, this ETF trading system, I'm going to give you all the rules. This is a trend following system using the NASDAQ, right? And then we buy the QQQs. I'm going to give you all the rules as a part of that program. I'm going to send the live alerts out as well. And just kind of FYI, year to date, what this trading system is doing here, let me kind of pull up my numbers. The trading system year to date is up 5% versus minus 2% for the S&P 500. So, and if you take the leverage version, it's up 19% versus minus 2%, minus 2% for the S&P 500. So even year to date, it has done a really good job protecting capital. Just kind of show you this chart real quick. This is, if you would have started with $100,000, in the blue line is the S&P 500, going back to 1999. You can see right here how much better you would have done. And then obviously, if you use leverage, I'm going to look at that chart here in a second, but let me kind of show you. So actually the chart I just showed you is following a crossover system I teach you versus the S&P 500. Now, the actual system that I'm going to give you as a bonus, let's compare it to buy and hold the S&P 500. And again, this is a long-term system. This is great for ETF money, mutual fund money. Replace it with limited drawdowns. I'm going to walk you through the performance. So the chart I just showed you is this crossover system, and I teach you this as well. But if you, starting January 1st, 1999 to the end of 2019, buy and hold the SPY, you'd have averaged 6.6% per year. Nothing to write home about, but I mean, not bad, right? Dividends reinvested. You would have started with 100 grand, you would have ended up with 384,000. If you would have followed every single rule going all the way back to 1999, and I've been trading this since 2015, by the way, over half of my money is in the system. you would average 10.3% per year versus 6.62% buy and hold. These are your mutual funds, your ETFs. So you would average a whole 4 points more per year if you would have followed these rules. But honestly, what I'm more proud of is look at the max drawdown. In 2008 or the 2007 to the bottom of 2009, you'd have, if you'd have started with 100,000, you'd have been 45,000, right? The worst max drawdown on this trading system in the last 20 years is 12%. 12% versus 55%. A lot of retirees like this because they can't afford to lose big. They can't afford to sit through, 35% coronavirus drop off or 55% drop off in 2008. So you're making significantly more than the market with significantly less drawdown. Now, the win ratio of this is 58%, okay, of this trading system historically. Over the last 20 years, about 100 trades, so it's about 5 trades per year. But here's what's interesting. You're actually only in the market. You're only invested 37% of the time. So think about it. The market goes up a third, sideways a third, and down a third, right? We're only going to be in the market for the times where it's in an uptrend, up a third, right? So, if you would have taken every signal going back to 1999 in this long-term system and just compounded it, 785,000 versus 384,000 buy and hold the S&P 500, right? There's a big difference between the two. Now, first question I always get asked in the FAQ is, Stephen, what if I take your QQQ signals in your long-term ETF trading system and just throw some leverage in it and see what happens, okay? Well, the TQQQ, the 3X version, I'm going to show you exactly what would have done. It only goes back to 2010. So I'm only going to give you data from 2010 because that's when this leverage ETF started. So from 2010, if you'd have taken every signal and bought the 3X version, started with $100,000, by the end of 2019, you'd have $1,439,995. Versus you take the same 100,000, buy and hold the S&P 500, dividends reinvested, $349,000. That is about $1.1 million more. Now you're using leverage. Not everybody wants to use leverage, but that's an option. The leverage version this year is up 19%. Okay. So there we have that. So this is what the compound adjusted rate of return has done. I talked about the 10.31% in the non-leveraged version, the QQQ. These numbers are going back to 1999. This 31% per year in the leveraged version, same signals, just by the leverage. That is going back to March 10th, 2010. That's when that started. So you're going to have a higher drawdown. Win ratio is about the same. Exposure ratio since 2010. So, I get asked that question a lot. So I want to give you accurate data so you can make a decision which one is for you. You could also do the 2X version if you don't want, all this volatility and be somewhere in the middle of that. You want 20% per year, you go with the 2X. You want 30% per year over time, you go with 3X, and then obviously the 1X. Okay. So this is just a testimonial from the guys in the private Facebook group. You can see Greg said, first trade paid for my subscription. Jeff was pretty pumped. He was in the leverage version, and I do trade the leverage version, but again, that's my choice. So they were very, very happy when they first got in, right? So here's what you're going to get, right? I'm going to outline everything that we talked about. You're going to get the complete weekly income trading system, system number 1, plus the alerts. In addition, you're going to get system number 2, which is the long-term ETF trading system we just talked about, plus the alerts, okay? In addition, every Tuesday morning, for some of you who might be more active traders, I send out a top setups video of the week. So I'm going to shoot a video about our current portfolio, where we're looking to get out at based on the rules. And then again, I give you about anywhere from 4 to 8 brand new setups if you want to trade off those with specific enter and exit strategies. So a lot of people buy stocks off that list and they do pretty well. Okay. Also, I get asked about options all the time. For the next 20 members, I'm going to give options alerts on both systems for 12 months. So that's options alerts on the ETF trading systems and options alerts on the weekly income system. So not only are you going to get the stock alert, you're going to get the option alert as well. So you can look at this chart right here. and see that, you don't need a huge move in the Qs, right? You don't need a massive move to get a very nice 100% gain, a double on your option. Or you can see this one right here was kind of a 25% gain from April 4th to April 22nd. We're looking to book gains much quicker on the option due to the decay, okay? But the options have actually done obviously better than the stock because the alerts, because you're using leverage. Now here's a perfect example. Cloudflare, this was a weekly reversal, a live alert from earlier this year. You can see back in March, and we actually made 4% on the stock alert, but we made 79% on the option. So we entered the calls right here, and we bought it at $2.40. We sold it at $4.30. So the option made 79%, and then we sold into strength, and then the stock stopped us out for only a 4% gain. So the option is a nice complement if you're looking to add a little bit of extra juice to your portfolio. So kind of recap: system number 1, system number 2, plus alerts. The weekly setups video I send out every Tuesday, plus I send additional content throughout the rest of the week, plus 12 months worth of options alerts on both systems. Huge value, guys. I mean, if all this did was just add, a little bit of extra weekly retirement income, would that be worth it? Maybe just finance a few trips on your bucket list each year. I know it's hard to travel right now, but we just bought a camper, and we are, that's our vacation right now, and I enjoy it. How about just allows you to retire more comfortably than you and your family thought, right? Or retired earlier? Would that be worth it? So right now, you can get everything we discussed, everything we talked about for $597. So $597. You can go to thetradersplan.com/checkout-NTS. Now, I want to do something special in these uncertain times because I realize, we don't know what the next 12 months are going to look like. So today I'm offering a buy 1 year, get 1 year free. So that's $597 for the next 24 months. So again, you can go to thetradersplan.com/checkout-NTS. And right now I'm offering a buy 1 year, get 1 year free. Let me drop that offer in the chat box, and I will drop that link as well. And yep, Neil said I love fishing. So me too, brother. Me too. I caught a bunch of catfish yesterday, a bunch of nasty catfish. So you can kind of see that. There is the order form. If that's something you guys want to do, I'd be happy to work with you. I dropped the order form link in the chat box. Again, buy 1 year, get 1 year free. I should help you overcome the uncertainty of these times right now to make sure you get the most out of it, right? Okay, so here's my 2-part guarantee, guys. Trade it for 30 days, right? Again, uncertain times, so trade it for 30 days. And if it's not for you for whatever reason, maybe it doesn't match your personality, just request a full refund. I only ask that you have taken at least 1 trade. Just take 1 trade. Right, and just send me the screenshot. That way you prove to me you did a little bit more and stuck your toe in the water. You try to make it work. But if it's not for you, just email me at Steven, STEVEN, at thetradersplan.com, and send that to me, and I'll just give you your money back. Right? Or I know most people, they don't want their money back. They prefer to make it work. They prefer to have a mentor. If you haven't tripled your $597 investment in 90 days, I'm going to personally mentor you until you do. That means if you haven't made $1,800 in the first 90 days, I'm going to meet with you. We're going to screen share. I'm going to look at what you're doing, and I'm going to see if we can put some rules in place to fix it, right? Because at the end of the day, you just want to be successful. I completely understand that, and that's me. That's not the people that work for me. I'm going to hop on with you. So that's my 2-part guarantee. Okay. So again, I don't know where you lie. Right, what your trading size is, even if it might be a little less than this, that's okay. I work with people all the time to trade less, but I think the most important thing is, what if it just added an extra $900 a month or an extra $1,000 a month, right? I showed you the stocks that we're in. I showed you what we're currently doing. This is the income you could be making, right? Depending on where you're at. So whether you are looking to supplement your income, or you're looking to retire early, or you're tired of just going with your gut. You're ready to follow a rules-based approach, and you need some accountability. Because I definitely hold you accountable. I think this system is for you. So there you go. Buy 1 year, get 1 year free, guys. I'm looking forward to working with anybody. You go to thetradersplan.com/checkout-NTS. And I'm going to see if you have any questions. Neil said, I love fishing out of my kayak and I really like your service. Hey, thanks, man. I really appreciate that, Neil. If you have any more questions, let me know. I'll kind of cover some of the most common questions right now. Usually one of the most common questions I get is, can I take your weekly income system and put it on the daily chart? I would not recommend that. I would not recommend that at all, because there is a reason that, you know, I have been trading this system on a weekly bar, right? You got 5 daily bars within a week versus 1 daily bar. The farther out you go, a weekly versus a daily, the less whipsaws you're going to have. That means you're going to have a higher win ratio. So if you decide to trade it on a daily chart, I'm not telling you can't, but I can't speak for those kind of results. And you're going to get whipsawed out more. You're going to have a lower win ratio than 70% that we've been doing, or the 68 this year. Okay. So that's kind of a frequently asked question. Number 2 is another question I get asked, you know, can I turn this into a short system? Can I take that reversal, and if I see it on the other side where it tries to, you know, move at all-time highs and by the end of the week closes lower and above average volume, can I short it? You could, but again, you know, the market has an upward bias. So I think that, and it just does, right? 3 out of 4 years are up. So when you talk about being the house, right? You want to be the house. You want to have the rules to make you the house, right? You play enough hands, eventually you'll be the house and win. You're going to struggle being in the house when you're swimming up creek, right? Always trying to short when the market usually wants to go long. So I don't know the results if you turned it into a short system, but I think it would be a losing system. I would make it a long-term system, because it pays to be a bull, right? It pays to be a bull. It just does. So it's a fair question. So if you have any questions, so regarding the options, again, I want to kind of reiterate. So I'm going to throw in 12 months worth of options on both systems. So when I send out a weekly reversal alert on Monday morning, you're also going to get an additional email with the option alert to go along with that as well. Okay. Any other questions here? Let me try to pull up the link, tradersplan.com/5 cornerstones. Okay, email me if you have any questions. Email me at Steven. I'm going to type this in, Steven@thetradersplan.com. Tradersplan. I'm happy to answer them. I want to make sure this is right for you. But I'm seeing some orders come through. When the options alerts are gone, I have to, you know, pay my options trader to set those up. So it costs me more money when those are gone. Those are gone, and I'm already seeing some orders come through. So, you know, if this is for you, you know, and the options is important, I would go ahead and jump on that. So if you don't have any more questions, again, feel free to reach out to me at Steven@thetradersplan.com. I'm going to wish you guys the best day you've ever had. I hope you have learned something. I hope I've inspired you, even if you don't are not ready to work with me. I hope I've inspired you to maybe test your own results. Throw some different exit algorithms on there and prepare to be amazed. So have a great Thursday, have a great weekend, and we'll see you on the inside. Thanks.